So let's come back to our entry here, and the reasoning why I feel that this 38.2 area combined with the 34 EMA low combined with the 3580 minor psych level, there's three distinct reasons amongst three of my favorite price action type analysis, Fibonacci, my wave, psychological levels. There's three reasons to see why this level would be so strong as far as a resistance. The most subjective, of course, is the Fibonacci, because a lot of different people will pull Fibonacci's from different levels. I absolutely acknowledge that. For this one Fibonacci that I pulled, I'm sure some of you in the room might see 2 or 3 other different levels. It's the subjectivity of Fibonacci that makes it very difficult, which is why I still will recommend that you come back to the wave itself and psychological levels. Those are much more objective. Okay, those are much more objective. So the entry, again, let's talk about the steps. You must identify an uptrend or downtrending market. So that means a 12 to 2 o'clock or a 4 to 6 o'clock wave. The next step is determine what your bounce or pullback level is. You can see we use a number of different tools here, whether it be the actual wave itself, whether it be a combination of the wave and Fibonacci and psychological levels. This just happened to be a perfect storm of 3 of my favorite tools. But whatever it may be, you identify where that resistance in the downtrend is, or where the support in the uptrend is. That's going to be where you'll be putting your limit order to sell, in this case, to take advantage of a resumption of the trend. Because what are we trying to do here? We're trying to take advantage of the fact that the trend is down, it's corrected, and we're hoping it's going to resume. That's the idea behind a swing trade. Now, whether you use market orders or whether you use limit orders, as long as you understand where you want to engage the market in terms of price. Our price was what? That 35.80, that 35.81 level. So however you determine you want to enter the market, it's completely up to you. Okay? My goal is that you know at what price you want to act. That's the most important thing. Okay? All right, so now we know how to set up a swing trade. That's just the entry. That's just the entry. Now we need to determine what now. In other words, once we get into a trade like this one, and let's continue to use this example, and then we'll scan the markets and look for some other examples. So once we get into the trade, why was this trade valid? What's the idea behind this trade being a valid trade in the first place? By valid, I mean, why did we get into a short? The trend was down. Why did I actually short into some near-term strength? I was taking advantage of a correction within an overall downtrend. Why did I choose 35.80? Well, it was a culmination of resistance offered by the wave, offered by Fibonacci, and offered by the minor psychological level. So I have the whys and the reason those were valid for me to want to get into this swing short in the first place. When do I know that these reasons are no longer valid? How much wiggle am I willing to give this market to find its way back down lower? Now, we obviously know at this point what happened. This happened about as textbook as it can happen, but they don't always happen this way. Sometimes the market will start to flatten out. Sometimes the wave will not be this strong a resistance level. This one worked out so great because there was 3 really strong reasons for this level to be a ceiling. And that means that not only did price action help create the ceiling, the wave helped create the ceiling, the Fibonacci helped create the ceiling. Now, if you think about it, that means you had kind of 3 different groups of people all agreeing that, yes, that's a ceiling. And that helps strengthen it. What if prices were rallying a little further up into the resistance of the wave? What if prices started to test 35.85 or 35.90, 35.95, maybe even 3600? What if prices continued to rally? At what point do I say I'm wrong? Okay? That's a very difficult thing for traders to sometimes admit. I don't know. Maybe I'm dating myself now, but do y'all remember Happy Days and the Fonz, and he couldn't say he was wrong? I don't know. Maybe I'm sounding really old right about now, but traders have that same problem. They often cannot admit they're all that hard work, all that analysis, and their favorite tools are all wrong. And then they'll start to argue with why they want to remain in the trade. They'll start looking for reasons to rationalize keeping that position. And that's when disaster strikes. Okay? All right, so if I take a look at how prices rally up into this wave, what am I relying on here? I'm relying on this wave and resistance to contain prices. So there's a couple options here, and let's go and discuss them. Now, every situation is going to be unique. Okay? Everyone's going to have different price levels, but these are the same types of considerations you're going to use regardless of the swing, regardless of whether it's an uptrend or a downtrend or anything. If you've got a double zero that you can utilize, in this case this double zero is sitting overhead, so it's acting as like resistance. That's exactly what I would want in a downtrend. What am I looking at in a downtrend? I'm looking for resistance. I love having a double zero overhead. That's one great thing. And notice that the double zero and my top line of the wave are overlapping around 36 and 36.01. Fantastic. All right. So I know there'll be some resistance here, not only because of the big figure, but I've got my 34-period exponential moving average on the high, the green line, offering some resistance. Now, I don't want to put my stop loss right at resistance. I want to let prices, I want to let that ball bounce. I want to let prices bounce off that level. I don't want my order necessarily waiting right there. So what I want to do is just hopefully put it just out of reach. And to me, I want to work about 3 to 5 pips. So I would be utilizing, say, 36.05, say 36.06 as a level. That is my point of validity. In other words, if prices are not able to remain below the bottom line of the wave and my double zero, the rationale, the validity behind my wanting to be short is probably no longer a good reason to be short. Have I lost anybody? I didn't talk about dollars. I didn't talk about a number of pips. I didn't talk about a percentage. I talked about where being short, based upon all the reasons that we got short, the downtrend and resistance, the wave, etc., I determined where it would no longer be valid. The maximum amount of wiggle that I'm probably willing to give this particular short is this area just above 3,600. Sometimes I might do what I call cheating in. If the middle line of the wave was closer to 3,600, I might actually use the middle line of the wave instead of the top line. Most of the time I'll use the top line of the wave as my point of validity in a swing. Most of the time. But if there's another important level that I think could act as a ceiling, I might want to use it. Now what's going to happen above 36? Why is 36 so important? Because what am I hoping for? The very reason that I'm looking to short this bounce up into the wave here is the fact that I think the sentiment will shift. In fact, I'm looking for exhaustion here. Think about the sentiment that I'm trying to take advantage of. I want to take advantage of the market just flat out getting tired when it reaches this level right here. That means there's going to be a sentiment shift. So what happens if I get north above 3,600? Could there be another sentiment shift? Sure. In fact, if prices get above this point of validity, my fear is that it's going to accelerate. Right? That's my fear. And if it accelerates through here, I certainly don't want to be taking a ride much further higher than that 3,600 level. So again, I'm looking for where the sentiment might shift. In this case, I was looking for an exhaustion shift. Here, north of 3,600, I'm fearful of an acceleration shift.